Are Social Security benefits tax-free now? Not quite. There's been a lot of talk lately about Social Security benefits being tax-free, but is that even true? I've heard it in the media, and I think recently in his national speech, even President Trump said as much. So I did some digging because I did hear some tidbits of how the whole thing worked. It's kind of a mixed bag. So I certainly wanted to believe it, but the former accountant in me forced me to look up the details to make sure that it wasn't one of those disappointing, too good to be true situations. And it's a good situation, but it's not 100%, not the way you would think. So are Social Security benefits tax-free? The answer is partially. And for some people, yes, 100% of their Social Security benefits will be tax-free, but it's not an across-the-board situation. The reason is because there are limits that you have to fit within in order for some or all of your benefits to be tax-free. The same goes for tip income, which is also frequently being reported to be tax-free under the recently passed One Big Beautiful Bill. I'm going to discuss tips toward the end of this video because some retirees do work in a part-time or full-time job involving some form of tip income. The information about the specifics of the tax-free provisions of both Social Security benefits and tip income are from the IRS webpage, One Big Beautiful Bill Provisions. They spell out the details of what each of these exemptions involves. I've included a link in the webpage to the webpage in the notes below, so you can check out the information yourself. Let's start with the Social Security exemption. What does the IRS say about the taxability of Social Security benefits? Effective 2025 through 2028, individuals age 65 or older may claim an additional $6,000 deduction against their Social Security. That's a little different than saying that your entire benefit is tax-free, but let's get deeper. This is in addition to the standard deduction for seniors available under existing law, and that deduction is a little bit higher than it is for non-retirees or for people under 65. Also, Social Security, the benefit has a maximum taxability of 85% of the benefit. So there's a bit of a break in there anyway. At least 15% of everyone's benefit is going to be exempt from federal taxes anyway. So the $6,000 is on top of that as well. It applies to eligible individuals as well as couples if both spouses qualify, meaning if both couples or both individuals in the couple are 65 or older, they'll be entitled to a $12,000 exemption on Social Security. However, that phases out for taxpayers with a modified adjusted gross income, or MAGI as it's called, of over $75,000 for individuals or $150,000 for couples filing jointly. You must be age 65 on or before December 31st of the tax year you're claiming the exemption. So if you turn 65 on January 3rd, 2026, you won't be eligible for the exemption for 2025. And that's important, 2025. The exemption applies to the tax year we just completed. So when you file your return this spring, you'll be able to claim that exemption. It's available to taxpayers whether they're itemizing or not itemizing. That's a big break right there. You can claim the deduction by including your Social Security number on your return. As I remember it, if you didn't have your Social Security number on any return, it wouldn't be processed anyway. So that's a given. And you have to file jointly if you're married. That means if you're married, you can't file separately and get the $6,000 exemption. Very important. I think this exemption is going to benefit the majority of retirees and in a major way. It may also cause people to begin collecting benefits earlier than they originally planned, because obviously not only are you going to have the income from the Social Security benefit, but a big chunk of it's going to be tax-free, and that's going to help. And let's keep in mind that the new exemption is on top of the fact that, again, part of Social Security is already exempt from federal taxes. So Under existing tax law, no more than 85% of your benefit is taxable anyway. Now let's take a look at tip income exemptions. Again, I'm including that because there are a number of retirees who have a part-time job or even maybe a full-time job, hopefully not, where they're earning tip income. So it's not an unusual situation. The places that I go, diners and such, there are people over 65 who are working as servers and what have you, and getting tip income. Situation is very similar with tip income. It's tax-free, but only within certain limits. Beyond that, you'll be required to pay income tax. And although the IRS doesn't specifically spell it out, it looks like FICA tax still applies on tip income, even if you have an exemption for a portion of it from federal income taxes. So that's very important. But here are the basic provisions of the tip income exemption. And this is according to the IRS, once again, same page, so you can check out that link. It's effective 2025 through 2028. So again, you can file your income taxes this spring or this winter, and it'll apply to 2025. It applies to employees and self-employed individuals who may deduct qualified tips they receive in occupations the IRS identifies as customarily and regularly receiving tips on or before December 31st, 2024. I think that just refers to the definition the IRS established. That's going to be most tip positions. Qualified tips includes voluntary cash and charge tips received from customers, including shared tips. So that's really something for your employer to figure out. The maximum annual deduction is $25,000. It'd be nice if it was 100% of your tip income, but $25,000 is still a really nice amount to be exempt, especially if that's your primary source of earned income. For self-employed individuals, the deduction cannot exceed net income before the deduction from your trade or business. I'm not sure how many people who are self-employed receive tips, though I suppose if you're driving for Uber or DoorDash, one of those delivery services, that probably applies there, because I think most of those people do file for self-employed. Similar to the Social Security exemption, there is a phase out for high income taxpayers. If you have a modified adjusted gross income over $150,000 and you file single, or if you're married filing joint with a modified adjusted gross income of at least $300,000, the exemption begins to phase out, and beyond a certain point, it's not deductible at all. So who qualifies? Again, you have to have a Social Security number. Everybody does. I don't know why that's even in there. And you can either claim itemized or non-itemized. I love that. A lot of times there have been exemptions or deductions, and they've only been available to people who itemize. In this case, it applies to everybody. That's terrific. There are other changes included in one big, beautiful tax bill. They don't affect retirees, so I'm not going to get into those. But there is one other change that doesn't specifically relate to retirees, but it could be a bonus tax break nonetheless. Loan interest on certain car loans is now deductible. I hadn't heard much about that in the media or even on the web, probably because it is very limited. But before we get excited about this tax break, understand that it comes with even more conditions than the Social Security benefit exemption and the tip income exemption. From what I can tell, this tax break isn't going to help most people because of those limits and restrictions. But it's worth spending a couple of minutes on it, just in case it might be a tax break that applies to you. So here's the overview. Again, it's effective 2025 through 2028, so you can file it for last year. You can deduct interest paid on a loan used to purchase a qualified vehicle for personal use that meets other eligibility criteria. However, lease payments do not qualify. That's a big loophole right there that's been closed. The maximum annual deduction is $10,000. Now that's interest paid. That's not the total of your monthly payments for the year. The deduction phases out for taxpayers with modified adjusted gross incomes of $100,000 for single tax filers or $200,000 if you're married filing jointly. Here's where it gets a little bit sticky and where so many people are going to be eliminated from the exemption. Your loan has to have originated after December 31st, 2024. So it has to be on a vehicle purchased in 2025 or later. The loan has to be used to purchase a vehicle originally used by the taxpayer. So it can't be a situation where someone's gifted a car to you and you take over the loan payments. You have to be the original borrower. The loan is secured by a lien on the vehicle. It can't be a gentleman's agreement outside, or maybe you secured the loan through other assets, like a margin loan against your stocks. And the vehicle must be used for personal use. If you're using it for business, it won't be eligible. Same situation. If you're driving for DoorDash or Uber, you're out on that. However, you can still deduct it on your Schedule C. If a qualifying vehicle loan is later refinanced, interest paid on the refinanced amount is generally eligible for the deduction. I don't know how many people would have taken a car loan in 2025 and have refinanced it by now, but I suppose that's more for going forward. A qualifying vehicle is a car, a minivan, a van, an SUV, a pickup truck, or a motorcycle. It has to have a gross vehicle weight rating of less than 14,000 pounds. I think they're trying to eliminate large commercial vehicles here. This is really important. The vehicle must have underwent assembly in the United States. So if you're purchasing a Subaru, a Toyota, a Honda, and it's not made in the United States, a Volkswagen, whatever, it does not qualify. So to verify final assembly, you're going to need one of these. The vehicle label at the dealership, that'll usually say the country where it was assembled. The vehicle identification number, because that information will be on file. You could also go through the National Highway Traffic Safety Administration. Apparently they have information on their website that'll let you know what vehicles are final assembled in the United States. Once again, you can qualify for both itemizing or non-itemizing, big plus, and you must include the vehicle identification number on your return for any year when you claim the deduction. As far as reporting requirements, lenders and other recipients of qualified interest must file information returns with the IRS and provide statements to taxpayers showing the total amount of interest received during the taxable year. So likely you're going to get something like a 1098 or a 1099 showing the interest that you paid on the loan, and that'll be the amount you can deduct. So my recommendation, again, I spent 11 years in public accounting firms preparing taxes. If you have documentation establishing obviously when you purchased the vehicle and that it was assembled in the U.S., you're going to want to retain that for as long as you're taking that deduction, just in case the IRS ever comes around asking questions. I have a feeling they probably won't, but if it gets abused, expect a wave of audits, or at least the IRS sending out dunning notices requiring you to produce evidence that the car was assembled in the U.S. So there you have it, a new round of tax breaks that will provide at least some relief to the majority of retirees. But since I have adult children, this is my personal opinion, I would have liked to have seen more in that bill to help working class people. I certainly appreciate any tax relief for retirees, but I would have preferred for the majority of those tax breaks to go to younger people, especially those with families. That's neither here nor there. That's just my personal opinion. What are your thoughts? Do you think that you'll benefit from any of these tax breaks? And how much of a difference do you think that'll make in your bottom line? Leave your comments below and let's chat about it. I might even turn your comment into a future video. If you like the video you're watching, hit the like button below and subscribe to the channel. And thank you for watching.